Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! Woohoo! See, people are slowly piling into the Hangout room. We'll see whether YouTube is recording. I see a blank screen right now. What is on YouTube's mind? Are you going to work today? Hey, it looks like it is. Blank screen right now. Hey, all right, so that looks like we're rocking and rolling there. Good morning, everyone. I do have the YouTube chat page open, so by all means, if you're over there and you're watching and you're like, hey, something's not right, just yell at me. I'll try and fix it. Maybe we can have one of our OGs just keep an eye on the YouTube page. And speaking of which, we might as well do some introductions here this morning. We've got Kevin on, who's going to be helping me in Alex's absence this fall. How you doing this morning, Kevin?
I'm doing great, thanks. How are you?
Awesome. Great. Hello there. Great to hear your voice. And I also saw Marat is on the call. He was bright and early. I don't think he has a microphone today, but he said that he would be more than happy to help out, didn't he? Just so, oh, look at all the people piling in here. Jeez, everybody's coming in here like a crazy. So we are running the Google Meet platform. It was interesting because actually I'm going to have a meeting with Colin and his crew from his site. I think it's called Bravado Trading, Colin, if I'm not mistaken. But later on, he says that he can get Google Hangouts to work for him. So maybe he can school me up on what I need to do to get that working again. But regardless, we're sort of ad-libbing here a little bit. I am hearing a lot of people talking about how they really like the 1080p video on YouTube. So we might just keep this OBS rocking and rolling. And this platform because seem to be getting a lot of positive feedback. But nonetheless, good morning, everybody. It's another dog day of summer. Trading session. I might argue that here we are, August 20th. Probably the next couple of weeks are going to be really floundery. Lots of chop, not really any clear direction. Do see we have a bit of a vacuum with regard to econs here this week. Where's my econ calendar? So we had some data coming out of Europe yesterday. Nothing really earth-shattering, no major red label warning signs that this is super important. So a pretty light day on the news front, and actually might even want to refresh this. Let's see. So we're still waiting on the American Petroleum Institute's crude oil stocks. That's sort of like a front runner. When I used to trade crude, we keep an eye on that. Obviously, the EIA is the big number that everybody follows. We do have a Fed speaker this afternoon, and what I found interesting was tomorrow we actually have FOMC meeting minutes coming out, which will sort of give us a snapshot on what the Fed's actually thinking, what their conversations were at the last FOMC meeting. And I've noticed of late that the market really likes to queue off of these minutes release. So probably my hunch is that we'll see some fireworks, and of course the Tuesday, Wednesday London kill zone. We talk lots about market pivots around those events. So probably the most pressing market moving event for the week is we talked a little bit about it, and it's not even really a news item, but the Jackson Hole Summit for all the central bankers happens this time every year. And usually they have lots of speeches and stuff like that. You'll notice that following that Jackson Hole, and it might even be sort of a follow-up. Fed Chair Powell is expected to speak on Friday, so everybody's going to be watching that with bated breath. But as I said too, I would take everything with sort of a grain of salt here as we head into the latter part of the summer. Keep in mind, we know where all the sort of big Wall Street fat cats are right now. You might find that early September, which often happens, we get some sort of reversal in the market. So just be cognizant of that. That's sort of our econ summary here for this morning. Nothing earth-shattering to report today, and like I said, probably going to be a relatively quiet week econ-wise. They are talking a lot recently about Germany. Basically, the consensus now is that Europe is probably going to slip into recession, and this is what I've been sort of thinking for probably the past, 6-8 months or so, is the United States will engineer a global recession. Ironically enough, I suppose you could argue the expansion from 2008 around the world was all predicated on loose monetary policy out of the States. They started to crank that back, of course, taking short rates up, and while it quote-unquote normalizes things for the Americans, the rest of the world is sort of hemorrhaging right now under that pressure. Also saw too thought it was interesting, and I'm not quite sure if I can find it, because usually when I go back and I try and find these news releases, they're gone, but you can see, the consensus is that Europe's probably going to fall into recession here. I thought it was just interesting that the Italian Prime Minister, and I'm not exactly sure how the Italian political system works, but if I understand correctly, they appoint a president. Prime Minister really carries all the weight there, but the president of Italy, I think it is, just resigned. Got it somewhere on all this. Here we are. Italy is sort of back in the spotlight. Their sort of appointed leader said, "That's it, I'm done. Time to go back to the polls." So we might find that Italy is back in the spotlight here going forward as well, and especially if Europe sinks deeply into recession. Things could get pretty challenging in Europe, and of course this plays right into Russia's hands. They love it when Europe goes into recession. If anything, maybe we should sort of be cognizant of the fact that things could start hotting up in Europe. If we look at the broader market, the message really hasn't changed. And, the little daily brief recaps, it almost sounds like a broken record. US dollar moving to new highs. Show me a new high, show you a buy. Euro flirting with disaster here. Hasn't totally broken down here off of current trading ranges yet. We're now down into a tail, so we might see some play down in here. But as we've sort of spoken about at length recently, there's just no reason to be looking for a bottom here out of the euro. And of course, if we slip into recession, all that kind of fun talk, then really, this gap that was established about a year and a half ago, and I remember when that happened, both the yen and the euro both gapped higher. My hunch is that needs to be filled in, and you notice that these little AB equals CDs are going to take us into that area. And also, too, probably a pretty good shot that this MUOC here probably needs to be filled in. I don't know whether we completely fall out of bed here. My hunch is there's probably going to be some support at this gapping level and bought targets and all that kind of fun stuff. Where we put the gap line, that's a tough one. I mean, the fundamentals are not good coming out of Europe. The politicals now are starting to look a little sketchy. And, of course, the chart just looks like a ski slope. So there's nothing really to get too excited about out of Europe right now. I don't know where to put this gap bar, but anyway, we'll just leave it there for now. With regard, and keep in mind the euro is like 35% of the US dollar index, so it carries a lot of weight. With regard to things like the Japanese yen, The econs that I see coming out of Japan these days are not so bad. They're actually relatively stable. I saw like machinery orders, that kind of thing, still relatively positive. And I guess the way I'm interpreting this is really this chart. Where is it? Oh, I gotta find the chart first. There we are. In that, if the U.S. economy is perceived to be sort of waffling here, we already know that Europe's in trouble. So the question is, are you going to put your money in the euro, where they keep negative interest rates and devaluing currency, all that kind of conversation? I think I can see on balance that euro really isn't a great place to park your money right now. So if you had questions about sort of the U.S. system, and do you really want to keep your money in the U.S. market, where are you going to put it? And I think that these are probably pretty good fear proxies in the market: T-bonds, gold, and Japanese yen. And you notice that they're moving pretty much in lockstep here of late. And I think that makes sense. And then on the flip side of that, and this has been my big debate of late, is is where does Bitcoin fall in this sort of risk on, risk off world? I've been, of course, watching the stocks and oil. They seem to be moving fairly closely in conjunction. And I've thrown on Bitcoin over on the risk on camp right now to just, try and get a feel for sort of correlation there. And as you can see, today looks like it's a risk off day. Gold, bonds, yen catching a bid, stocks, crude, and Bitcoin a bit softer on the day. I'm still debating as to how Bitcoin and crypto behaves through this political instability out of China right now. It was interesting, sort of a kind of a funny anecdote. One of our sort of China aficionados on the site sent me a really cheeky little, and I'll just show you the release because it's kind of funny. I don't necessarily need to name him. I'm sure you all probably know who he is, but that's here nor there. Where are you? There he is. Sent me this funny picture. The Americans, I think, might have gotten their hands caught in the cookie jar. Where he sent me this message. U.S. diplomat in Hong Kong was caught meeting with Hong Kong protesters to try and, I don't know, is she sort of, stoking the fire? I don't know, tough to say. But a very interesting piece from this gentleman this morning that, and I had put out, actually I think it was even to this same conversation, I had put out that the Americans are now being accused by the Chinese and the Russians of maybe playing dirty pool, in that they conveniently left all these arms sort of negotiations, INF, all that kind of stuff, and then all of a sudden just recently they're now out testing new cruise missiles, and the Russians and their Chinese are like, hey, wait a minute, something doesn't smell right here. So, on top of the fact that you've got U.S. diplomats with their hands caught in the cookie jar, stoking sort of insurgency kind of things in Hong Kong, you've also got the Americans kind of playing dirty pool with the arms race kind of stuff, and building out nuclear missiles and all that kind of stuff. So, I think it's, for the record, we should, make it perfectly clear that it's not, and I definitely make China and Russia great again. Well, and okay, so the debate is already starting to rage here. So the Chinese and the Russians don't like it when we do what they do on Here We Go. But I would just simply make the point that, hey, everybody their shit all stinks. It's not like one is better than the other. They're all jerks at the end of the day. And if anything, we here at TRI, we try and just sort of float above all this stuff. Hey, what about PMA? Yeah, let's try and make the world a better place. Anyway, so it's an interesting anecdote. And I thought I'd just bring it to the attention because sometimes it might feel like I'm heavily biased against the Chinese or the Russians or whatever. I just want the world to be a better place, and all of these guys, they all stink. But anyway, that's here nor there. Okay, so back to sort of our market commentary, which is what we should really be concentrating on. I was interested, this morning, of course, everybody has been super jazzed about gold and silver and gold stocks and stuff, so I did a nice little study of the gold and silver market here this morning. There's no easy way to sugarcoat this. This market is looking very, very nosebleedy. I am a little bit concerned that the public, of course, is being encouraged to come in and buy the top of the market, froth. But even if we looked at this as like an altcoin or Bitcoin or any market really for that matter, I mean, when we see these egregious moves, we better, at the very least, maybe temper your enthusiasm about buying too much more up top here. I don't think that these markets have broken down, and you can see how long breakdowns take to occur. Especially on something like silver, and usually there's a couple FU moves along the way. So I don't have any like M tops on any of these markets just yet. I think that's important to note. But at the same time too, way too late to be buyers. Interesting, down in like midpoint of reload zones, there's Collins 70.2. That he likes to follow. You can see that there are cheeky little gaps even on the gold chart right down at this level. So gaps, lots of gaps. I mean, this is a very dangerous market in my opinion. I don't know what it actually takes fundamentally for this thing to calm down. I think, again, this is probably a conversation about, risk on versus risk off. I suppose one could argue if the political situation in Hong Kong calms down a little bit, then maybe we might see a risk on trade back on the table. It is interesting. It's of course probably very controversial, and me personally, I can't justify. Where the hell is it? I can't justify putting my money to work here because I just don't trust these people, and there's no rule of law here. It's just whoever has the biggest gun sort of dictates policy. But it is interesting to see how China's trying to clean itself up here. We now have one low, two lows. We never did hit the move stop to scratch level on this bot. Maybe now we have a third low. You can see the market actually tried to put in a nice little W through this. So, we've been talking recently, if we talk about the U.S. stock market, about cycles and how, actually stocks might go into actually a rip-roaring bull move here as we go through that back half of this cycle. So, maybe we see, I suppose we could very easily see just with one tweet, oh yeah, we're all happy-go-lucky, all friends again, and woo, off goes Chinese stocks. But it is interesting to see how China is trying to set up a continuation trade here. So, keep that in your back pocket, out of the back of your mind right now. As we had sort of pointed out recently, we did have algo signals. The formation was just, you could drive a truck through it. It was so big. But algo signals on the stock market, ironically enough, 2-to-1 levels, huge amount of risk. And to actually get 2-to-1s here, you'd need a move to new highs. I don't know whether that's realistic or not. But what a beautiful setup for a trade down in here. Anybody was hunting that last week. Way to go. Right now, just sort of sitting just a little bit above the original double bottom level. So really no sort of signs of failure per se, but at the same time too, FU move here, and then we just went and double topped this morning right at that level. So could this use a bit more cleaning up? Are they waiting for some sort of nod or tell by the Fed through Jackson Hole to sort of kick this thing off if it wants to move higher? That could definitely be the case. I probably would make the argument that we got up into reload zones. Good old Mountain Man, he got satisfied there. I don't know, and I suppose we could even make the argument that this was a little reload zone test right up in there as well. So I don't know. Considering dog days of summer, all that kind of conversation, I like the idea that the stock market is just sort of stuck here, and probably will be until we get through that FOMC Jackson Hole event coming up here. But I could definitely understand if sellers did want to step in. There's a couple pretty juicy short locations up there on stocks as well. There's one other thing that sort of jumped out at me this morning. We'll keep an eye on this stock market. I mean, just basically going sideways, just about exactly the middle of the range. And it's interesting how this is a 50% retracement, and basically Bitcoin is sitting almost at exactly the same sort of level. If we look at the CME contract, and we do 50% levels going back up top. Gee whiz, there is that 50% level. It was tagged. That's what's supposed to happen according to Mr. Gann. We also make the argument that did we accept back into value, and if so, then we probably ought to head back up and tag value high. And there's that cheeky little gap up top on the CME contract, which I think corresponds with things like 88.6s on the stamp and stuff like that. And notice that lines up nicely with value high there. So to me, this looks like it's got a pretty good shot of working its way back up top here. And I don't really have any signs of failure yet here. I mean, I suppose we can talk Bitcoin in a little bit more in earnest later on. And maybe I'll leave the conversation at that right now. Yes, we did have a nice little inside bar failure there, and off of things like 30 minutes, 15 minutes. We had some signs of failure here. I had a really cool, but I'll show you later on, the sine wave kind of thesis working on Bitcoin, and I have a funny feeling that's sort of playing itself out right now. So, CME boys, technically this trade's still working, and just really now we're into value, so really it's just a question of can we ratchet up into reload zones and fill this gap in. My hunch is yes, but at the same time too, markets never really move in a straight line. You can see up, down, up. We just went through a big up. Could we come maybe play at 38.2 for a bit here? Sure, that wouldn't be totally shocking. But for the time being, I'm thinking like 4-hour charts. I'm thinking risk is back on. And just sort of dovetail that conversation about gold. We did come back down into a reload zone, the bottom of the diamond. This is risk off trade. If this is moving up, we've had a nice little bounce overnight. And what was really cool, I was chatting with Julian last night. He is trading gold a lot these days. I think you could make an argument off of like 4-hour charts. He had a nice little inside bar. Probably his RSI studies and stuff like that started to turn back up off these lower time frames. You can see the W in place here. So, it is a reload zone. It is trade location. So I don't think it should surprise anybody that we got this rally here. And really all this is doing is just sort of completing the diamond. Usually, and I've been talking about this a lot on the site lately, usually these consolidations resolve about 2/3 the apex. So if we draw that out something along those lines, where is 2/3 of this apex? I wouldn't be surprised if we get some sort of resolution pretty soon here. So keep your eyes peeled on the gold market, and like I said just a moment ago, this is looking really, really dangerous. Um, I guess it's really just a question of what are the Fed, what's the Fed minutes going to say, and then does Powell drop any nuggets of wisdom on his speech in the Jackson Hole event coming up here. So keep your eyes peeled for that. Let's see. I suppose we could talk a little bit about stock. I was pretty fortunate in that we got in on this Sonos trade back in the sort of spring, and really haven't done a heck of a lot here. But this is such a great testament to buying at least 6 months at a time. I love to buy the leaps, especially this time of year. I've got the January 2020s. Working, and you can see we just broke out, so this is an even bigger W. My hunch is our target on this Sonos should be probably somewhere up in this area. If we just do an A, B, C, D, I think that's the lowest low there. Yeah, pretty close. What is that? That's 965, and that's 962. No, so that's a little bit lower right there. So I wouldn't be surprised if we get a little pop up in here. Notice there's a cheeky little gap right up in here. Maybe we can blast up into there. She's got a head of steam behind her, and I bought these at $1.25. And right now we're sitting, really good anecdote of why you should have your open orders working. I'm not quite sure. This will be a delayed quote, but let's see where we're sitting here. This is the January's. So we're sitting 240 to 250. So I'm sitting on the offer at 250. And look at these cheeky bastards. That is so typical. These things are supposed to trade in nickel increments. How the fuck are they trading 248? So that is so typical of floor traders, right? So they just do not want to give me a fill. And then if they have to give me a fill, well then fine. They'll say, look I'll buy your calls off you at 250, but I bought my calls at 248, so I'm gonna take 2 cents a heat on the trade. Jerks. Anyway, so orders working. Just have to be patient. If I do get my fill, and this is one reason why I like to buy like odd lots, 3 of these. If I can get 2 of them off, then and my order's at 250. Then I get all my original money back, right? This cost me a grand total of about $375, $380 for commissions. If I can get 2 off at 250, then it's $500. So I make a nice 30 some odd percent on my money, and I've got a free car. Basically, I control 100 shares of this Sonos from 1250 going forward. So I guess that's like right in this area here. So we'll see how it goes. This is just like the overstock trade. Really good sort of comparison. And it's just sort of business as usual. I will report that this, and I was pleased to see this. I don't know whether this stock's going to perform or not, but it just is what it is. We had the breakdown through here. Of course, this was just a face where it moved down. Didn't get the opportunity to get out. Just was patient. Worked my open order at my level, and I was stopped out today on this Kodak. So I was pleased to see this. Just clean the position up, walk away. Next bus in 10 minutes. We took our shot off of this double bottom. The double bottom didn't hold, and so I just got to walk away. So actually, I was pleased to see that position is just now squared up. I don't really see a heck of a lot else to get really excited about in the stock market here. I've got one dog, full disclosure. This is a position that absolutely just fell out of bed. And I fucked up, right? This was just simply a mistake on my part. The breakdown was here. I had the opportunity to get out. I fell asleep at the wheel, and now I'm dying 1,000 deaths here. I suppose I could just take the, what is it? It's like 60, 70 cents a share punch in the nose. But I think I'm going to use this as a good sort of lesson for myself about how I should have liquidated at this position here. So really good example of how things can actually go very badly if you don't obey the rules. So if anything, this is don't do what Brian did. Don't do what Donnie Don't does. I don't know if anybody remembers that. But full disclosure, I don't want to blow smoke up anybody's ass. I've got a problem here, and I'm trying to deal with it right now. I've got my open order working at the original breakdown point, like the Kodak, and we'll see how this goes. You want to tease me? Just say, "Hey, Brian, how's your auto doing?" I'm not seeing a hell of a lot. It's interesting, David's Tea. I really like this stock, and actually I was in a shopping mall yesterday. I turned around and boom, there's a David's Tea store staring me right in the face. So I like the story. I like the name. There's just not a heck of a lot to do here. If anything, you know what this sort of reminds me of, and I think not a bad dovetail, is the stock market itself, there's one in Pacific Synergies. They're really being really aggressive. We'll know that the junior market, and we have like our Tuesday TRI SOF meeting tonight. So anybody who's a level 3 or beyond and wants to participate, watch out for Zach's post. Feel free to come on in if you'd like. I really don't like level 1ers and really even level 2ers to get too heavy into options right away. It's not an insult to you. It's just that I need to force you to go through sort of my options boot camp. And all the level 3ers just went through that. How did you find, Joshua? Do you think you understand options a little bit better? I know even some people that took the program. I'm thinking of Colin. He's like, gee whiz, man, that's a lot of stuff to absorb, and it's going to take me some time to really digest all this. But nonetheless, it's not a diss on new people to trading. It's not a diss on new people to the site. It's just I think you need to, you have to approach options very, very carefully and very slowly. So anyway, where am I going with all this? This sort of shaded study is the Russell 2000 versus the big cap stocks. And I've, like our commentary there just a moment ago about the, things like David's Tea. This thing is just stuck in the mud as sort of a junior stock. And I think that is this conversation. If for the small cap market to really rock and roll, and if we really think that this is a top of the market, you all, of course, had a wonderful education in what market tops look like through 2017. Bitcoin and altcoin market, the top of the market, everything goes up. And I fully expect at the top of the market, the Russell 2000 will be rocking and rolling. So this is, if anything, I hate to say it, but this is another anecdote of why I don't think a crash is coming here, because really to set up a crash, you have to have everything moving up, and everybody's saying, oh, you've got to be in the stock market, you have to own stocks, right? And that is usually a market top. So what is going to get me to think that, Zach and my little TRI SOF penny stock plan rocking and rolling? Well, we got to start seeing W's start to form here. I don't know whether it comes in the fall. Usually the fall, right? They don't call it the fall for nothing, all that kind of conversation. Usually the small cap market doesn't really start kicking ass until, buy when it snows, sell when it goes. So if anything, I hate to say it, but I'm kind of looking for this malaise to continue. Not really looking for a huge outperformance on small caps right now. Wow, that sure was a mouthful. I sure hope somebody got value out of all that. Okay. It's now actually well past the bottom half of the hour, so why don't we head on over to crypto? I think just to sort of start the conversation off, as always, not a bad idea. Where are we on our sort of weekly study? Not a heck of a lot has happened here this week. If anything, we talked a little bit 2 weeks ago about it was encouraging to see Bitcoin actually close the week at a new closing high. We then promptly pulled back, and interesting, you can see how we just basically kissed the 13 EMA. I tell you, this is a great little tool to help you just sort of keep yourself honest. If you did want to get in on this move, just wait for moving average checks. What do we see developing so far this week? It looks like we're trying to paint an inside bar. And I don't know whether we can call this harami or not. I don't want the samurais jumping out of the closet and chopping my head off here. We closed at 10.318.99 there, and this low is 10.267. So no, it cannot be called like a right inside bar. Harami. We could call this a bull rammy. It's interesting how this high to low trend line that I've been following forever, that basically stopped the bull right here. You can see that, doink. And also too, if I'm not mistaken, if we look at the lower time frames, that was basically 50% of that move there. So if anything, in our conversation about risk on, risk off, yesterday was risk on. Today, it's looking like it's a bit of risk off. But I would argue that all of this is just simply waiting for both the Fed minutes due out tomorrow, and then Mr. Powell's speech there at Jackson Hole. Does he drop any bombshells? I suppose you could make the argument wicks and tails like to be eaten. Brian, he loves his candle body lows, his trade location. That was just a sick-ass level right there. And you can see the wicks up top here. My hunch is if there is going to be a sick-ass trade location, probably going to be somewhere up in this area here. So what is that? It's 11.6 area. If we now move down to a lower time frame, do I want to get into that yet? Not just yet. Let's go the dailies, and we can do OKCoin, but I don't know. I'm kind of losing interest in OKCoin now. But off the dailies, that was that 38.2 correction that we sort of said defined the bottom of the range here. There's our reload zone up top there. That's still sort of probably acting as firm resistance. And, just like you saw off that weekly chart, this looks to me to be some sort of big, almost like a triangle like that sort of kind of thing. Something along those lines. So 2/3 the apex, you can see we're starting to come into areas where we're probably going to resolve. We've had 1, 2, 3 tests to the upside here. 1, 2, 3, 4 tests to the downside. So get ready, folks. Something's brewing. And as we said, if you had the balls to step in against these lows, you got a pretty good little treat there. And this is what sort of puzzles me. Is Bitcoin risk on, risk off kind of idea. This should, if this is risk on, then it means that basically through the weekend there. We went from risk off back to risk on here. Probably, we can drill down to a bit lower time frame now. If I start looking at things like the 4-hour charts, remember we had talked about algo signals on Friday, and Colleen was teasingly suggesting that she wanted us to go and buy Bitcoins here on this breakout. Ironically enough, actually, it looks like it was a half decent signal after all. I had put out sort of comments and stuff that I saw like multiple double bottoms come in here. If we go down to like say this 2-hour. So we had this W come in and then this W come in, and we're working our way higher. I think, this initial W, this really big one, I think it creates this very steep uptrend. And you can see how the market's really having a really hard time holding that trend. So I think that trend's in question now. I mean, the market's starting to lose that in earnest. And then off the sort of this double bottom, boom, 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 which confirms here, that creates this channel. And I think this is the prevailing price channel right now. This is off a 2-hour chart. And also, too, of course, we have this predominant trend line off of the tops. And I think that's going to act as support should we have to pull back. We often see that the market will break above a trend line. Then it'll come down and it'll actually use the trend line as support going forward. So the confluence of these two trends, this double bottom here and then the original double top, I think we got a pretty good shot that we could see some serious support in here around this 10,500 area. And last night when I was in the lounge, I had just sort of suggested, I was seeing that we had this apex and this apex, and notice how the market just stopped right on that level. It was just too much resistance to get through. And so using this apex as sort of the pivot top, and then looking at this apex as the pivot bottom, I just threw on sort of like a sine wave kind of thinking here. What might this look like? And I was actually quite pleased to see that this morning we're basically just working that away. Really good analogy of why I like to use these channels and the midpoint of the channel. You can clearly see that that's acted as quite a pivot point for the market. And that's what the market's playing with right now is, do we accept below this midpoint pivot line or do we crap out and have to head right back down to the bottom of the channel? So I would say that that's probably just working away. Interesting, just looking at this chart, just eyeballing it, I see, there seems to be a pretty important level right up in here. You can see that node. So, also too, if we can hold this channel, notice we have this trend line and this confluence coming up here. So I could actually, believe it or not, see something, if we can hold this, we could work our way up into that kind of area. That wouldn't be outlandish. If we have to dump, I could see something along those kind of lines. That wouldn't surprise me either. So, do I have any sort of trade or anything setting up here per se? Not yet. If I go back to that 4-hour, I don't really have any signs of failure yet here, but I do have some anecdotal evidence that things are starting to look heavy. And I think that's, as technicians, you often see this, right? We're going to work our way into location. We're going to look down at our indicators. We're going to start to see validation that, the indicators are looking weaker than anticipated. Or, they're starting to look weaker. And so as a result, we start looking for market tops. So, going through this motion, as I said, earlier, off of that weekly chart, and I think that's fascinating how this high to low trend line going way back here, the market literally stopped right on that. And I had said earlier, I found it fascinating that was basically 50% of its range. And this is why we like to use the 50% rule as just sort of a keep you honest technical tool. Mr. Gann, of course, says that in essence this almost by nature it has to happen. And what's also interesting too, I've done this with you guys before, if we actually just do a time range, so that's 54 bars from the top to the bottom, what do you think the odds are that this 50% bounce happened in almost exactly half of what that took? I'd say pretty good. So Joshua and I are thinking in the same line. So let's see. Half of 54 is what, 26, 27? So let's see how we did here. 27. Oh, look at that. I missed it by 1 bar. And I wonder if you actually start the count on the next bar following the bar bottom. So, I mean, talk about that. I mean, gee whiz, people. If you want a tool just to add to your tool belt, I mean, damn, right? Stone cold. That's ridiculous. So, yeah, but what do you think? Your bravado trading people. I'm sure some people would like to have that as a nice little tool for their tool belt, eh? Anyway, point of the matter here is this actually looks like it was absolutely just spot on cue. The question I have now is, and it's interesting just looking at this range, because I think when we zoomed in and just looked at this entire range, from top to bottom, have we accepted into value? I think the double bottom here is the market's acceptance back into value. Notice the tail lows here this morning are that double bottom breakout level. So if we have accepted into value, then as Colleen will be more than happy to remind everybody, we got about an 80% shot that we're going to head back up here, back up to value high, and maybe that's sort of that risk on trade. Where's our risk on trade? Yeah, let's put this away. Maybe risk on. Chinese stocks start to rock and roll. Here, maybe the risk on trade can start really performing, and all our cycles and all this kind of stuff. Basically, everything starts rocking and rolling to the upside. Maybe that's sort of the catalyst that enables us to do this Hogue value trade up top here. And then, of course, we said there's some juicy gaps on the CME up top here. So, the path of least resistance right now actually to me feels like up, not down. And then, what are going to be the signs that this thing's done? First off, usually I have found that the bullish impetus is actually what starts slowing down first, i.e. the bulls just start losing interest in adding to their positions. Last night, when we were sort of sitting right in here, I was conjecturing that we had one high, two highs, and then a third high, and that was on this move here. And I was like, uh-oh, this is starting to look dangerous. But then we made another new high in volume here, so that broke this high. So now on this breakout here, and notice that this breakout here is on much less volume than these moves here and here. Does that potentially set up a scenario where the bulls could fall asleep? And the answer has to be 1, 2, 3, yes. So, still this remains on the table. If we get an up bar that does less than 1.1 million, here's the volume number over here. But if it does less than 1.1 million coins on a 4-hour basis on an up green bar, then that will mean that the bulls have officially fallen asleep. And you can see we came close. Not quite. Now they perked up a little bit here. But, very simply put, we are starting to get the anecdotal evidence that, maybe things aren't that exciting for the bulls anymore. The bears have got this high here. Then on these dumps, you see higher highs. Not breaking out of here, though. Higher highs. And then the bears have backed off here. So we've got one high, two highs. I think you could make an argument that was 2.89. This number here is 2.93. So the bears are still awake. They haven't fallen asleep. If this high holds, then 1, 2, 3. If we do a red bar below one of these levels, I guess it's these lows in here, 1.2 million, 1.23 million. So it looks like 1.2 is our magic number. Then the bears will have officially fallen asleep. And you can see right now, this current 4-hour candle, whichever way it finishes, it's probably going to be an interesting tell here for the market. Then we look at things like momentum, like the raw push. We did go to new highs here on MACD, on the histogram here. So that was 136.34. These highs were 116 and 113. So there's no signs of real divergence here. Now, you see that things have come down and yet price is kind of waffled. We could very easily push to new highs here, and this MACD does not go to new highs. And then we'll start having the anecdotal evidence that, oh boy, here comes divergence. So there's no signs of failure here yet either for me. And then lastly, we did have Willie go very briefly stupid here. Right? It went when it's entered stupid right in here on this move. Willie's Willie's trying to come out of stupid here right now. But, there is slight warning signs that things were getting a little overbought there. So, I don't think it should surprise anybody with Willie, just flashing warning signs that, again, do we ever hunt a setup that comes in at the 50% level? No. That's supposed to actually be a profit-taking level for you, keep you honest, nice simple indicator. So if anything, seeing the market flashing overbought signs at the 50% level, I don't think that should have shocked anybody either. So put it all together, we're definitely not in a buying location. If we did want to hunt things like bots, we probably need to see this develop a little bit more. I might make the argument for things like the algo perspective. Where the hell's damn man? I got algo. Where are you, algo? There we are. These signals that came in last week, I think they're still working. There is no signals now. Everything's just sort of, not really that interested either on the bull or the bear side. And, if you did want to hunt a new trade set up here, I think you just got to cool your jets and just wait for things to settle down. So I'd say too late to be a buyer, still a bit too early to be a seller. Guess we can take just a couple minutes and look at the other big boys, maybe some internals. I hate to say it, now that Trex and Poloniex have delisting notices going out, I'm getting them in the emails and stuff. I don't see a heck of a lot going on in the broader altcoin market. Everything looks still very much on its knees. If we look at things like spreads, they are actually cleaning themselves up a little bit, so that's encouraging. We have basically this market structure failure in Bitcoin, but it did put in a cute little W here, and it's trying to work its way back up into trendline resistance here. If we look at things like Litecoin, which I think did actually flirt with going into backwardization here, trying desperately to hold this flat line here. Nothing really too exciting on the bull side for me to get my head wrapped around. I think I could make the same argument. Litecoin and Ethereum are looking very similar here. And I think this is an excellent conversation about the altcoin market. It still looks very, very choppy to me. I suppose if we go into sort of a risk-on trade, and crypto catches a bid, we might see these things perform a little bit better. The only problem that I have with that is, Bitcoin itself still stuck in this range. Have not lost 38.2s. Mountain Man still the sort of resistance to the upside. Remember clothesline AB equals CDs. I'm actually still thinking Bitcoin can close up here at this Mountain Man level. So we'll see how that plays, and higher highs and higher lows. Like I said, that was important that weekly bar made a new high there. I think it's still pointing up in the short term. Problem is when we go and look at things like Litecoin and Ethereum. We'll start with Ethereum. These don't look nearly as happy. All right. We lost these key lows at Mountain Man. She's flirting right now with the weekly 30 SMA. So it makes sense. It's trying desperately hold on to the bottom of the moving average sandwich, but I don't know. I wouldn't really place big bets on this holding. If we go down to lower time frames, I can start to see what do you think the odds are that we had divergences come in through all this? I'd say probably pretty good. Oh boy, look at that nasty divergence. Interesting, I've got RSI on here, so I think you could make an argument like Julian and the day traders that like using RSI. pretty nice little trend line to work with there on the RSI. It broke it. It tried to recapture it, then started to roll over. Really, I would make the argument from an RSI perspective that we probably won't go back into a bull run until this trend line is actually broken. And now we're starting to get like ramping ups of even steeper RSI trend lines. So really important level here as well, because this is basically like the midpoint of that RSI study. We've talked lots about this in the level 1 program when we introduce you to oscillators. The midpoint here sort of defines whether this is a bull market or a bear market. So when we're above the midpoint and trending higher, this is a bull. When we're below and trending lower, this is the bear. And I might make the argument that we're fighting right now at this 50% level here of the RSI study. So definitely nothing to really wrap your arms around if you wanted to make the bull case here. And we're probably even really steep RSI trend lines. That's gone, right? If anything, I suppose you could probably make an argument of something along those lines as well. So really nasty area here. My hunch is, for whatever it's worth, we come up, we am out, and then we head down and break even lower. But we'll see what happens. Only time will tell. So nothing really to get excited about on things like Ethereum. And, I'd love to hear some news out of Vitalik. I think I heard someone saying, and I don't know whether this is true or not, but someone was saying things along the lines that he's actually working on different projects right now. And if that's the case, that doesn't bode well for Ethereum. And then Litecoin looks even worse. Jesus. Litecoin did close below its 30 SMA, and now we're actually getting a confirmation bar below there. You can see it's kind of sloppy, but it is there. If we put Willie away for the time being, you can see, as I say, maybe I'll change this to a different color. There we go. You can see how we have, and like I said, it's sloppy. I mean, it's not pretty. There we go. We do have an M here in OBV, and you have an M in RSI. So you could argue to a certain degree there is a DAVO that fired through this. AB equals CDs, 88.6s, bottom of value. I don't see a hell of a lot of reasons to be too much of an Ethereum bull, or a Litecoin bull right now. And this is post the fundamental event. Right? There is no fundamentals now driving this. So that's a bit dangerous unto itself. So there's your sort of crypto review. Bitcoin just hanging out in this trading range. Thought it was interesting. Some guy came out just the past couple days to claim that he is Satoshi Nakamoto, and he said my hard drive crashed and I lost all my 900,000 Bitcoins. And I don't have any access to any of my old emails because they were all hacked. I don't know whether you can believe that or not. I put the tweet out. I just said, do you guys buy this? And everybody's like, nope, 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 nope. So go figure. But, we have things like, so there's that floating out in the marketplace. We've got the BACT and the Ledger X and all the futures markets floating out in there. Has Bitcoin been adopted as sort of a market proxy now? And so Chicago boys and all that are using it in the market, broader market sort of thinking, risk on. Do we see rallies back up top? We've got that on the book. So I don't think the Bitcoin story is done, but I hate to say it, I just don't see anything going on in altcoins right now. So okay, I think we'll probably leave the daily brief at that today. I hope you guys got some value out of this information. It is top of the hour. We've got lots of stuff on the docket today. So I'm going to leave it at that. Kevin, what do you think? Did we give these people good value today?
Where are you, Kevin? You got to be like Mr. Mayor. I always ask Mr. Mayor if we gave good value, and he gives me my seal. All right. So we got Kevin sort of learning the ropes of what it takes to be a bus driver, and that means you got to pay attention through the whole thing. All right. Why don't we leave it at that? Kevin and I got to go off and do the Daily Brief recap video. So have yourselves a great day, everybody. All the best, and bye for now.